Hey guys, today's video is all about financial independence and my plan to achieve financial independence. So what is financial independence? Well, it's basically being independent financially. It's in the name. It's about not needing to work. Basically, you can retire, in other words, from your investments, stocks and things, whatever investments you've got, whatever income streams, you're able to retire. You don't need a job. You're not sort of reliant on anything. So, what is my plan? Well, what I'm mostly thinking about really, as far as, getting to financial independence, is investing in property. Now, with, stocks and shares and that kind of thing, you're going to need about $1 million invested. For example, if you invest it in an index fund, to get a decent amount of money there really, per year, just living off of dividends, and that can vary a bit as well, depending if it's a good year or a bad year. Not that stocks and shares are not good investments. They're certainly a good income stream in the long term there. But for financial independence, for achieving financial independence quickly, it's not the best way to go about it. Now, if you compare it to property, for example, you can get a loan with a bank, mortgage. You buy an investment property, a cheap property that can rent fairly high. You'll need 25% deposit. If the property costs you 100,000, then 25,000. Now, once you've got that done, you've got the property rented out. That's just a constant income stream. And most people are probably able to to save that amount at some point. If you've got a good job, even better. But even if you're working minimum wage, if you live very cheaply, very frugally, you perhaps invest in some good stocks there, make a bit of money, buying and selling there, you can get to that 25k. And remember, it doesn't even have to be 25. That's just the example, for $100,000 property, for example. But if you find a cheaper property that's 50,000, for example, then it'll be even less. It'll be half that amount. So you need a relatively small amount to generate quite a lot of income. Now, I'll take an example of a property in the UK. One that they typically cost right in the north, a small house for a family. It typically cost you around 60,000. So the deposit will be small, about 15,000 or less, perhaps down to 13,000. So it's not a huge amount. You can save that in a couple of years easily. And once you've got that done, you'll have that rental income there. And those houses, I can tell you, rent for almost the same money as the same type of house in the south of the country, which costs 40,000 more, and it's basically the same property. So the rents don't vary that much. And I know as well in the USA, if you go away from the coastal areas, from New York, California, those sides, and go more inland, there are a lot of cheap properties in the USA. Rents are very, very high, and the actual prices of the property is fairly low. So the same thing applies there. You can buy cheap and rent high. Now, of course, rent always increases year on year as well. And from these properties, if you rented them out room by room, you could probably get yourself an easy 2,000 a month. Probably about 1,600 profit. So you can do one of those. By the time you've got 3 properties, I mean, you're making nearly about 50,000 a year just from 3 properties. And all you've had to really invest is probably it'll be less than 100,000. Now, yes, you have got loans on these properties, but the actual loan amount will be very low, because you're not borrowing that much. You can get on the longest term loan possible, so you've got very cheap monthly payments. And the value of the house will increase over the years. The rents will increase. Every year you can increase rent. Maybe every 2 or 3 years. It depends. It's up to you. But there are people that increase rent year on year. So it's just an investment that requires, you know, less than 100,000, you can get yourself a couple of properties there in the bag, and you know, it will just be a constant income stream. And it's a very safe investment. It's not, you know, as risky as you know, in the working with the stock market and things like that, or you know, investing in companies. You know, it's just a solid investment there that's just going to bring you a constant, you know, constant cash flow, and you're going to have very little problems with it. I mean, your average tenant stays about 4 years on average, so you know, it's not like they're changing every couple of months or anything. You might be unlucky, but once you've got a few properties, you know, even if one was empty, you know, the other couple, they would cover that rent. Well, not the rent, they would cover, you know, the bank loan and utilities and things until you've got someone else in there anyway. So, you know, with 3 properties really, you can achieve financial independence. Now, it's different for everyone. It depends how much you need to live a year. But for me, you know, 50,000 is more than enough. I live very cheaply. I don't really spend much. I can easily live on that for the rest of my life. I'm not saying, you know, that's necessarily my plan, but you know, once you get to 3 properties, then you know, you are financially independent then, and then it's up to you if you decide, you know, to take a step back and, you know, stop working as much, or you can, you know, continue working, but then you've got that sort of you know, you've got that confidence there that whatever happens, you know, you're financially independent. You don't need to rely on anyone, on any employer, or if you've got a business, if your business goes bad, then you still got that other income there. So it's a great investment. You know, it's probably the easiest way to achieve financial independence in any country. Now it does vary, different prices here and there, but property is always a good investment. You know, wherever you are, and it's just about finding something that is a good deal, that is fairly cheap, and the rent is pretty much, you know, the standard rent, you know, for that kind of property. You know, in the USA there are some extremely cheap properties, so you can take advantage of that. Now, if you live in California or New York, I'm not saying you know, buy there. That will be, you know, unless you're a multi-millionaire, it's not a good idea. They're just too expensive for properties. But you can go a couple of states, you know, inland, and you can buy there, and you can, you know, leave the property with a manager. Yes, you have to pay them a small amount, but it's worth it. You know, you haven't got to deal with any of the stress involved there. So that's my easiest way, you know, to get financially independent, that practically anyone can do, given enough time, and you know, given that you can save up that first deposit. Now, the second deposit is not so bad, because then you will have, you know, the additional cash flow from the first rental property. So, you know, that will be helping towards the next deposit, and if the house prices go up, you can refinance on the new value, and you know, you can get a new loan on the extra amount. So if house prices go up 20,000, you can then get, you know, take another 20,000 out on your property there. So that's just, you know, another way of getting even more properties, and you know, making your financial independence even better really. So that's my big tip. Property, it's the easiest way. Keep investing in your stocks and shares by all means. A bit of spare money each month. I certainly enjoy it, but property is probably the easiest way that you're ever going to get financially independent, and the quickest, short of you know, winning the lottery or something. So thanks guys, give the video a like, see you in the next one.